What if I told you there's a 35% yielding S&P 500 covered call style ETF that pays out income to your portfolio on a weekly basis? Now, what if I also told you that this ETF has not only basically traded sideways and hasn't decayed substantially, but also so far since inception has offered a massive total return? Well, this video we're going to dig into this S&P 500 covered call ETF that I so far for whatever reason have not added to my portfolio, but all that's going to change very soon. So if you like dividends, if you like income, if you like upside and total return, then make sure to stick around, drop a like down below, and let's get right into this ETF. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, some of you guys might have already guessed it, but the S&P 500 covered call ETF that offers a 35% distribution rate, at least as of right now, is XDTE, or the 0 day till expiration covered call strategy ETF. Now, this ETF might or might not be in some of your guys' portfolio already, but it's not in mine currently, and so far looking at the performance, I'm not exactly sure why not. Now, it says right here, XDTE utilizes a synthetic covered call strategy that seeks to provide current income on a weekly basis, while also providing exposure to the price return of the S&P 500 index. The overview right here, it says the round till S&P 500 0 days till expiration covered call strategy ETF, or XDTE, is the first ETF to utilize 0 days to expiry, or 0 days till expiration options on the S&P 500. XDTE seeks to provide overnight exposure to the S&P and generates income each morning by selling out of the money 0DTE calls in the index. XDTE is actively managed. Now, I'm no stranger to these newer round till ETFs that do pay out on a weekly basis, and for whatever reason, I really haven't added either of XDTE or QDTE into my portfolio as of yet, and this is simply because they're new strategies. I wanted to see how things play out for a little while, and I, of course, was a little bit concerned of NAV decay when it comes to any of these ultra high yielding ETFs. But so far, XDTE, as I'm going to share with you here in a minute, has done very, very well, has offered a nice positive total return, and has offered massive distributions weekly. But to get back into the basics, it says why XDTE. First off, weekly distributions. XDTE seeks to pay weekly distributions out of sold option premiums. Now, if you're like me, you love getting paid dividends, you love getting paid distributions. Most of us get paid them out monthly or quarterly, but weekly is even more handy. Whether you're using this income to pay for expenses, to pay for bills, or like myself, if you're using all that income to reinvest into more ETFs and stocks right now, building your snowball, building your portfolio, however fast these ETFs want to pay us, be my guest. Number 2 is income potential. This ETF seeks to generate income through a covered call strategy on the S&P 500. And lastly, harness volatility. XDTE sells 0DTE options on the S&P 500 and seeks to exploit structural market mispricings. Now, XDTE has much less AUM than QDTE, about half that, around 300 million, which is still very impressive considering the fund has only been trading since March of last year. Now, it does have almost a 1% expense ratio, which isn't cheap, but I think with these style of ETFs, a lot of us are getting sort of used to paying to play. Now, I'm going to share with you guys the total return, all the performance metrics of this ETF, at least historically, in a second here. But distribution history, this is honestly wild to look at because, of course, they pay out weekly. So a lot of us are used to looking at ETFs or stocks that pay out quarterly, or of course, even monthly at that. But this ETF pays out weekly. It's like your weekly paycheck almost. Now, looking at the last several payouts, this is on a weekly basis. We got 33 cents, 60 cents, 64, then 15, 23, 18, 25, 27, 21. They're sort of all over the place. Somewhere around maybe 30 cents more or less if you were to average them out. Comment down below if you guys know exactly on average how much this ETF is paid as far as distributions every single week. But even on the lower end of things, I mean, it's not horrible getting paid 15 cents per week for an ETF that costs somewhere around 40 or 50 bucks. Either way, it's still very, very impressive and seems like it could be a great opportunity to buy into if, of course, you're an investor that favors cash flow. Now, looking at XDTE's performance as far as price return goes. Now, this ETF, I guess since inception, since March last year, is down a tad. I still wouldn't really consider this an ETF that's decaying though. For the most part, it's been trading sideways, even up at some point. And honestly, even if this ETF went down, let's say 1%, 2%, 3% per year, if it's going to pay 20 to 30% as far as income per year, I don't really think any of us are going to be complaining. So even though it is down 3%, I personally would still give this a check mark as far as a non-decaying ETF. I mean, if you want to see something decaying as far as price return goes, look at something like TSLY, which I know before my income investor followers say, if you look at total return, TSLY has not done that bad. I know you're correct, but as far as price return return goes, it has been trading more or less into the ground. So with comparing XDTE to some of the other ultra high yielders, I would say this ETF is trading more or less sideways, which that's a win in my book. Now that's one of the things I'm always a little bit worried about or weary about when it comes to these newer strategies, these ultra high yielding strategies. Anything that offers a 10%, 20%, 30% yield potentially, I'm always worried that I'm going to get paid a massive amount of cash flow, but see my overall investment degrade over time. And although this doesn't happen every single time, I mean, I know multiple different examples like ZVOL, the Volatility Premium Plus ETF, for example, which is actually up 29% in the max time frame as far as price return goes and pays out a massive yield of like 30%. But I personally am always still cautious on these newer strategies because I don't want to buy into something at 50 and earn a ton of income on a weekly or monthly basis, but see my overall investment drop down to 40, then 30, then 20, etc., etc. Now you're probably wondering how much has XDTE actually returned investors since inception. Now over the last 0.83 years, it has almost been trading for an entire year now. It's offered investors with dividends reinvested around 17% total return, around 20% per year. Now without those dividends being reinvested, we're still talking 16 to 19%. I mean, correct me if I'm wrong, but that's not bad whatsoever. A lot of us, including myself, are pretty happy with 8%, 10%, 12% per year. So if I'm going to be able to have exposure to weekly distributions, which besides everything else is a ton of fun, and earn anywhere from 10 to 20% as far as an annualized gain goes, sign me up for something like that. Now, I made it clear that as of right now, I don't really hold any XDTE in my long-term portfolio as well as QDTE because, again, I've been trying to sort of feel things out, see how it trades, etc. But honestly, I do plan on adding some of both to my portfolio sometime soon here. I don't know how many shares. I don't know if it's going to turn into a large position or a small position, but as of right now, it's probably going to be more or less a smaller position. And this is not because I don't believe in the strategy or believe in the management, but because I want the majority of my portfolio moving forward as I get closer and closer to using some of my dividends and distributions for things like bills and expenses. I want the payouts to be a little bit more consistent. Now, maybe someday the management will sort of even things out and withhold some of the net assets and pay out more of a consistent weekly payout. But for now, it's sort of a coin toss on what you're going to receive on a weekly basis. And I say that all to say that even on the lower end of things, this ETF has paid out a boatload of income, all things considered. But either way, I'm excited to say that in videos in the future, you're probably going to find XDTE and QDTE inside my portfolio at some point here. So now that we talked about and went over XDTE, the S&P 500's 0DTE cover call strategy ETF, which has offered a positive total return since inception, is basically more or less flat as far as price return goes, and also has paid out a boatload of distributions every single week, more or less. I lastly, most importantly, want to hear from you guys down below. When it comes to XDTE or QDTE, these different cover call strategy ETFs that pay out on a weekly basis, are you personally a fan of them? Do you hold on to them? Give me some more data and insight down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.